Hello, welcome to this webinar for ESS BIZTOOLS subscribers, helping clients with commercialization of an invention. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Thank you for your support of ESS BIZTOOLS and ESS BizGrants. I hope that you will enjoy this presentation. If you have any questions and you're not watching this webinar recording as a live event, please send me an email, peter@essbiztools.com.au, outlining your question. Or you can give me a phone call, 1-800-232-088 is the best number to get me on. If you're watching this presentation live, please type in your question and I will answer it later in the webinar. How do I commercialize my invention? How many times have you heard that question? I've heard it on many occasions over the years, most definitely on a more regular basis in the last 25 years, but it keeps on coming up. How do I commercialize my invention? Well, let's start with research and development. A lot of people undertake research and development, and I suspect quite a large number would have been undertaking research and development in the last couple of months over the Christmas, New Year, January period. Many of them will have undertaken it in their own name or in a partnership or even a trust. But if they're serious about research and development and they're wanting to be able to claim the research and development expenditure as a special item, they need to be incorporated as a company. And they can only claim the research and development expenditure at the research and development rebate offset from that time on, from the time they're in the company. They need to spend in excess of $20,000 on an aggregate basis to be able to claim the research and development tax offset. And they will need the research and development system, which quite frankly is a webinar in its own right. We have a complete documentation of a research and development system that is available within our advanced package. If you haven't got the advanced package, but you are interested in having research and development, please contact us. We have it available on a standalone basis as well that can be incorporated within a starter package subscription or indeed as a separate subscription all by itself. So research and development is where it all starts for most people who have got an invention. We then need to look at the prototype. Many people who are trying to invent something develop a prototype. Now, over the years, I've seen a lot of variations in prototypes. Someone will come to you with something that might look like this. And by the time it's been finalized and gone through focus groups and other experts, it might look like this. So the prototype can change, but it's a good idea if someone's got a prototype, because when they get round to looking to raise money, the prototype will come in handy. And it can spark some spirited debate, I found over the years, as people argue about the good and bad points of a prototype. Market research. This is very important. And you might say this is outside of accounting. Well, some of these things are, but you need to be the manager of this process if you're going to be offering a business advisory services segment to your accounting firm. The market research, though, I think starts with your client to start with. Get them to develop a spreadsheet highlighting the key requirements, the key characteristics of their invention. What's in it? And then in separate columns, list their competitive products that they're going to compete against. What have they got in their product that is not in the others, is the important outcome that you're trying to find. And if they haven't got that, I don't think they got a product that's probably going to stand the challenges of trying to commercialize it. But if they have, that's great. And as part of this process, and hopefully it may have been done in the research and development section, is they need to have undertaken searches into prior art. Who else has invented this type of product and patented it or registered it or put it into the marketplace? Now, where do you find this information? You do searches at libraries, through industry associations, and on the internet. But the important thing you have to stress to your clients is they need to keep the records. They need to identify when they undertook certain checks. And after the market research, or part of the market research, may well be an application for a provisional patent. And they will need a patent attorney to undertake that. So your advice could well be to them, if you think this is valuable, you need to talk to a patent attorney. Now, after they've spoken to the patent attorney, there may be a slightly different response comes back as to whether they need a provisional patent. But I think it's your responsibility to make sure you have recommended to them that they consult with a patent attorney. And if you know patent attorneys in your location, you could refer the client on to talk to those patent attorneys so that he can get, or she can get, an overview of what lies ahead, what it might cost, what the whole international patent concept is all about. It does cost money. And in fact, I noticed that one of the patent attorneys in their website is saying, unless you think you're going to generate at least a clear $10,000 from what you're inventing, don't worry about getting a patent, because that's what it's going to cost, a minimum amount, to get some sort of patent protection. So the cost of the patenting process can be quite expensive and needs to be understood by your client. The project budget. I think this is a very important part of the process, because we're looking at the commercialization of an invention. How much more money's got to be spent from where the client currently is? I'm assuming they've came in to show you the prototype. They've brought this into your office or asked you to go out to their workshop or wherever. And some of them can be quite big. I had one recently, which was probably half the size of my rather large table that the client struggled into my office. I said, if you told me you had that to bring, I would have come to your premises. In fact, I had offered to go there in the first place, because I find that very enlightening to go to a client's premises where they've made their invention. It can give you an insight into how organized the client is, and to find out what else they've been involved in. They already got a history of inventions, because you are probably going to get involved in helping the client to raise money. That's always in the back of my mind when I'm talking to someone who has asked me the question, how do I commercialize my invention? So you need to find out a bit about the client. You need to find out his or her background. Have they done this before? Were they successful? What industry was it involved in? How long ago? Do they understand the journey that they're about to embark on can be long and difficult and costly? So they need to sit down with you to determine a project budget. What needs to be spent from today to get to a commercial ready product? Now that terminology, commercial ready product, is defined in a federal government program called Accelerating Commercialisation. And it says it's when they're able to make a sale, their first sale of the product at a commercial markup. Not at a markup of only 10% because they're basically recovering their costs. I had a client that had developed a product that was to be used in the mining industry. And they needed some extra money, but they also needed some real-time trials done of this product. So they entered into a deal with about 5 or 6 mining companies to trial their product, but to also pay them a sum of money that ended up around $60,000. We did make a submission to Oz Industry as to whether this did not qualify as a commercial ready product. And they agreed because there was no markup, there was no recovery of overhead expenses as such. The $60,000 was basically determined on direct product purchases plus labor to get to an amount. And the mining companies did the testing over a period of a few months and gave back some interesting feedback. And this was all part of the process of finding out where changes needed to be made. The product was covered by the provisional patent in that period, so they could get feedback. I've started talking about the Accelerating Commercialisation Grant Program. It's for companies whose turnover can range from $0 up to $20 million, but they must be a company when they apply for it. And the grant can be as high as $1 million on a 50% funding basis. So that's giving you some idea of what the federal government, or in particular, Oz Industries, believe that this process can cost to go from basically a prototype, which is where the Accelerating Commercialisation Grant Program starts, to first commercial sale. Could be a journey costing $2 million. And you say, wow, what's included in that? Well, it can be the ongoing protection of the intellectual property expenses. It could be all sorts of legal documentation to protect the technology, the intellectual property. It can be drafting the rules on procedures on how to use this, implementing training on how to use this product. Could be making substantial changes to the prototype. I had one client that we got permission from Oz Industry through the Accelerating Commercialisation Program to spend about $300,000 on modifications to the prototype. And this was based on feedback that we got from focus groups. Focus groups is where you get a group of people, could be 2 or 3 or 12 or more, but I've had them with 12 people in the room. Can be very interesting. You need to try to bring them to order every so often, which you end up with about 7 or 8 different conversations going on. And with some people obviously involved in more than one conversation. But what you're trying to do is to get feedback as to how this prototype can get improved so that it might end up something like this. They're not the best selections I've got here today, I'm sorry, but hopefully you get the point. Things can change, colors can change, products that they're being manufactured from can change. One of the other interesting government grants that's available is called Innovation Connections. It assists in finding an expert to undertake an examination of the prototype, amongst a few other things, but this is the one component of this grant that I wanted to bring to your attention because it means something in this context. But the support is only available for companies, and that's the same as we've just seen in accelerating commercialisation. But it's, I think, a bit tough on the turnovers. A minimum turnover of 1.5 million for most of Australia, but in Northern Australia, there was a special exemption put in of a minimum turnover of $750,000. And what can happen is the government have employed through Oz Industry advisors in various locations around Australia, mainly the capital cities, but there is an advisor in Northern Queensland and in the Gold Coast area, and they assess what needs to be done to get an expert opinion, and they basically coordinate with universities and research organizations who can get paid. So half the cost of this assessment is paid by the program and the other half the client has to pay. And this is all part of understanding what the ongoing costs are going to be before this business can make a commercial sale. And these types of expenses can add up. There could be some traveling and accommodation that's required. Could be a range of things. So we've done all that. We've had a focus group. We've got some input. We have some understanding from experts as to how this product's lining up. You've got a patent attorney working on the projects. The 12 months of the provisional patent doesn't take long to run out. So you need to make sure that your clients got started as soon as possible. And make sure that they understand what the benefits are of the provisional patent. They can start to demonstrate the product in public as long as they disclose they have a provisional patent. So we're ready now on trying to help this client with commercialize their invention to say, well, how much funding are you going to require? So obviously we got that projection as to what the extra expenses are. There may be a little bit of income coming in. The client may already have another activity going on in the business, which is going to defray some of the outlays necessary. But we need budgets and cash flow forecasts to identify the cash shortfall. How much is needed? So where are we going to get the money from? You might strike a client every so often. It says, don't worry, I've got $500,000 tucked away. I can pay for this. But unfortunately, I tend to dream about those sort of clients. In all seriousness, most people who undertake research and development tasks, I find, have used up all their money on the research and development tasks. And they're now looking to be able to raise money. And that's why this process of identifying whether this project has got a chance in the commercial marketplace is very important. Because otherwise they can be paying a lot of money that they've got no chance of getting a return on. So the first thing I suppose most of you would look at is, can the client borrow the money from their friendly bank or one of the new banks that are spinning up with no and without security in most cases, but they need to see your trading. You need to have been in business for 3 years. The client does. And if they don't qualify for those, the traditional banks normally want security. Security from someone. Now, it might be a third-party guarantor, but or it might be property that's owned by the company or one of the directors or a favourite aunt or someone. Then the client might say, no, I got no one. Can I raise capital? Now, over the years, capital raising opportunities for small private companies has gone from very bleak to a little bit good until now. I would classify it as being extremely good on what has been available in Australia over the last 40 years. 40 years ago, Section 708 was introduced to the Corporations Act. Now, up to that stage, it was extremely difficult for a small private company to raise capital. You virtually had to be going into business with your father or your brother, or a boy that you went to kindergarten with, then primary school, then high school, then played football and cricket with him, and you were very close friends because you were restricted on who you could approach. Section 708 of the Corporations Act opened it up a fair bit. So much so that a private company can raise up to $2 million in 12 months from 20 investors. There does need to be an association with those potential investors, but they could be employees, suppliers, people who have got an awareness of your client's company. But you cannot advertise or over promote it, but you could have mention on your website. And if a friendly journalist wrote an article in a newspaper that said that the company's achieved such and such, and that the invention looks very good, and some experts have said it's rather unique, you might get some people ringing you up in asking whether you're looking for investors, because it's a bit of a code to them that you're looking for investors. The 20 investor maximum is great in the first year, but if you want to keep on going back to the market to raise money, bear in mind the 50 shareholder limit can raise its head pretty quick in about a few years, and you may then have to look at going to an unlisted public company status. So just bear that in mind right from the beginning. But you can raise capital. I'll just go back to that. There's not a lot of formality in using Section 708, but my suggestions a little bit later on of the documentation that's going to be needed will apply. I never take those potential investors for granted. Some of them will be sophisticated investors and they know the process. The next way that I wanted to look at was crowdsourced funding equity raising. Now, this was introduced following the Turnbull government's innovation overview that was announced in December 2015. It then took a couple of years to get the legislation through the Houses of Parliament and to appoint the special intermediaries that the legislation made provision for. That's the crowdsourced funding intermediaries, who are people with Australian financial services licenses. As far as I know, there are 16 of those businesses appointed in Australia, but it would appear that only 4 are active in the marketplace today, which is a shame. I think it gets back to there's not enough applications coming forward from the marketplace. This is a real challenge for accountants. We have 12 intermediaries out there who are not occupied with deal flow. I'm sure they'd love to see some deal flow. They need to see some good candidates coming forward so they can help them go through this process. The way it works is that the intermediary takes all the documentation that the company, and with input from you, a lot of input actually, have prepared, and they then list the company on their website, and over a 90-day period, they try to raise that capital from the public. It's a great system. Australia is about 6 years behind the other major industrial countries of the world, but it's finally settling into a process. So the company can raise up to $5 million in a 12-month period from the public and repeat it next year and the year after that and the year after that, if the directors wish to, and if the marketplace supports them. And obviously, if they get the approval from a crowdsourced funding intermediary who has got a lot of power in this whole process. The turnover when they start any capital raising, not just the first one, but any of the capital raising, has to be under $25 million on an international basis. And the gross value of assets anywhere in the world has to be under $25 million. And the company cannot be listed on a stock exchange anywhere in the world. That's it. You can raise $5 million by issuing shares in the company. There needs to be a clear understanding by the directors of how crowdsourced funding equity raising operates. We have full details of that in the product package within the advanced package, which will help you deliver these services to your clients. I think it's a great program. And I'm only disappointed there's not about 500 companies a year going through it in Australia instead of the 70 to 100 a year. There should be a lot more. And I think those clients are out there. And quite frankly, with the increasing interest rates and some of the uncertainty in the marketplace at present, I think crowdsourced funding equity raising could be very attractive for a lot of your clients this year. Please look at it. The next capital raising opportunity that I want to talk about is early stage innovation company. Now, this was the running partner of crowdsourced funding equity raising. Unfortunately, in the parliamentary process, they got a bit separated, and this one was legalized 6 months before crowdsourced funding equity raising. Don't ask me why. It was one of the Canberra secrets, but it finally happened. We have both of them. Now, early stage innovation company is there to offer special benefits for investors because Prime Minister then, Malcolm Turnbull, realised that to get investors interested in a whole stack of Australian young companies, there needed to be a carrot. There needed to be an inducement. And they introduced the inducement by saying, if the company had qualified for that status of being an early stage innovation company, an arm's length investor investing in that company who was a retail investor would obtain 20% of their investment. Their investment was a maximum of $50,000. The government didn't want all the money getting invested by a retail investor into one company. So $10,000 is the maximum tax rebate. And for a sophisticated investor, the rebate is calculated the same way, 20% of investment up to a maximum of $200,000. And this is a tax rebate. It just comes off the investor's tax bill. And if they can't use it all up in the first year, it rolls on in the second and third year. And there's more, because the investor, if they hold those shares that they've been issued as part of this determination of early stage innovation company process, are held for longer than 12 months and less than 10 years, there's no capital gains tax. Now, if this is a great return, I see the Brisbane Angel Group achieved a return of 26%, 26 times, 26x. Not more than 26%, 26x on an investment they made a couple of years ago. That's what people dream of. So if they had done this with an early stage innovation company, and I don't know whether they did, that would have been tax-free, no capital gains tax for them. Incidentally, if your client, if you're acting for the investor, owns shares, still after 10 years, the company can be revalued and they have a new cost price for their ongoing capital gains tax calculations. Now, to be deemed to be an early stage innovation company, there is a eligibility process. In the first instance, the company normally has to be under 3 years of age, but there are some ways that if they're under 6 years of age, some of them can qualify. The turnover has to be under $200,000 in the previous 12 months without any grant money received from that accelerating commercialization grant that I mentioned earlier. So that doesn't count. So as long as it's under $200,000 and the expenditure's under $1 million. So if you tick, 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 and you're not listed on a stock exchange anywhere in the world, you can pass the first test. Then there's 2 tests, further tests, and you have to pass one of them. The first one is called the gateway test, and it has 8 questions in it that you earn points for, and to qualify under it, you must earn 100 or more points. So the questions relate to research and development expenditure. What percentage of your turnover have you undertaken? Have you already received funds from external investors? Have you registered a patent anywhere in the world? Have you registered provisional patents? Have you participated in the Accelerating Commercialization Grant Program? They're the main ones that you earn points for. And if you can accumulate that, and you can prove all that, because that's black and white, isn't it? You've either done those things or you haven't, and you've got documentation to prove it, you can qualify. If you can't do that, and don't fear, the government thought of this, you can pass what's called the principles test. There's 5 questions in the principles test. You have to put a submission in, more than yes, no answers, and you submit that to the tax office, who then share it with Oz Industry, and they give a decision normally in about 6 weeks as to whether the company qualifies as an early stage innovation company. And then they can start talking to investors. So now we're getting serious. We want to talk to investors, but some of what I've now got here would have also been required earlier for the Section 708 capital raising and the crowdsourced funding equity raising, and would now be needed if you've got that certificate or you've qualified under the gateway test for the early stage innovation company status. Because we're now getting to the serious part, and that is getting ready to try and raise some capital. You need a business plan. And it's not a business plan you go off and just write on your own. Sit down with the leadership team, get their input. These are the people that have got to implement this, and their investors are not going to be very happy if they got no idea of how they're going to run their business. That is part of this process. So this is not a 1 or 2 hour job. This might take a couple of days in your timing, because you need to be steering them through the process, raising questions, acting as the devil's advocate in some cases, get them to really think through the issues. So we need a business plan that looks at the next 3 to 5 years. What are they planning to do in this business? How are they going to sell the product they've produced? Who's going to distribute it? Who's going to look after the international marketing and sales programs, if that's what they're going to do? We then move into predictive accounting reports, budgets for the next 3 to 5 years. Now, they may have done some budgeting earlier when I said they had to calculate what their outlays were going to be from their prototype through to the completion of a commercial ready product. But we need to now go back through it, make sure you've got all the management team, all the workers, everything now included in a proper budgets and cash flow forecasts for the next 3 to 5 years and projected balance sheets. And I'd be recommending that you utilize the Plan Guru software, which we are in a venture with, and as part of our advanced package, that you will have that material. So we need the predictive accounting reports. By offering these services, I think you will be recognized as the key advisor to your SME clients. You'll help them move from that to a commercial product, which they've now been able to raise $1 million in shareholder money to bring it to fruition. It's a great experience. But you also will find it's a great experience for your younger accountants, because they've worked on a whole range of activities, haven't they? Going back to research and development, understanding prototypes, looking at the market research the client's done, then looking at the cost estimates from the current stage through to commercial sale level. Then if they're going down the early stage innovation company path, understanding, reading the material on that, helping the client put their application to the tax office if they're using the principles test. If they've used the gateway test, our system details each of those 8 tests that they can qualify under to earn points. That's then got to be fully documented, because the tax office, whilst they don't want it up front, they want it when the tax return's lodged. And there will be some very unhappy investors who have parted with their money already so they can get the tax benefits if they then find out that the company didn't qualify as an early stage innovation company. They are not getting their 20% tax rebate or avoiding capital gains tax when they sell those shares if they hold them for longer than 12 months. So you need to make sure this process has been followed through. But this is great experience. Then looking at sitting down and doing realistic business budgets for 5 years, cash flow forecasts and projected balance sheets. And part of the business planning process. It's interesting, challenging work. So all these product packages that I'm referring to are all included within the ESS BIZTOOLS packages that you have available to you. If you're a starter package subscriber at this stage, you can upgrade your subscription, or you can enter into an arrangement with us to have access for a special fee for standalone product packages that you might need to be able to give this sort of advice. So that's our overview of the innovation journey. I hope you get as much enjoyment out of doing this sort of work as I do about talking about it, because I think this is bringing all of your accounting skills into play. And there will be some taxation work and all that, of course, because as you're doing the projections forward for 3 to 5 years, there will be taxation questions to be considered. But you're looking at a whole range of business issues. You may well have a combination of capital raisings also. I skipped over that. You could start off with some Section 708 capital raising. And what this is all going to bring to the fore is, what's the value of this company? Difficult to determine at first. The 708 money might be necessary to start paying your fee or the patent attorney's fee, or just to live with this company. And the money might be coming from relatives who would not be eligible under the rules for the early stage innovation company. And the early stage innovation company process is still 2 or 3 months down the track. They need money. So Section 708 capital raising could be the first thing that happens. The second thing could be everyone's confident that the company is going to pass the test to be an early stage innovation company. So getting that ready and putting it to the tax office, then going out and talking to those people. But you might find that that capital raising might only produce 400,000 or 500,000. This company's trying to raise $1 million. So then the next way might be to say, well, we can now do a crowdsource funding equity raising. You have a conversation with an intermediary or the 3 or 4 of them, if you like, and determine who you think you can work with. And then look at trying to raise capital, because you've now got a bit of a track record. You've been able to raise some money from people that the client knew, Section 708, family members, friends, close friends. You've then packaged it up, got the approval from the tax office, especially under the principles test, because that's really got Oz Industries endorsement that you've got a product that looks very good. So that's a credibility factor. And then you're able to take all that. And by that stage, hopefully things like social media platforms are fully operational. So there's a lot more people should know something about this company's story, which all helps raise the capital. So if you have any questions, and I can't see that I've got any on my screen, I hope I've answered the questions of anyone that's watching on the screen now. But for most of you, I know will be watching this at a time that's more convenient to you. Send me a question, because at ESS BizTools, we really want to help you undertake the innovation journey with a number of clients every year. I can guarantee you it will be interesting, but challenging. Once again, thank you for your support of ESS BizTools and ESS BizGrants. I look forward to hearing from you. Stay safe. Have a great day. Goodbye. And I hope that you have found some interesting material in this presentation.